Hi, my name is Bernd Nussbaumer from macrobeat.co.uk. Another exciting week we had with the main event, obviously being the FOMC meeting on Wednesday. And I have to say, bravo, Mr. Powell. He has managed the near impossible with the market that went into the meeting with an extreme dovish expectations to the point that it seemed impossible for the Fed to really come out on top. But they did, or shall I say, Mr. Powell did. At first, things didn't really look all that dovish. But then came a Q&A trick that Draghi seems to have used. Whether Mr. Powell did do this intentionally or not, I don't know. But the moment he mentioned, we haven't discussed the size of the cuts, whether 25 or 50 basis points, that was a key sentence for me that changed everything. I didn't really expect to hear the C word, as in the cut. I didn't expect the 50 basis points being mentioned. So this sentence, in my view, turned the entire FOMC meeting into a real sort of dovish event. And the reaction in the market was quite clear, with the dollar lower, stocks higher, and yields lower. More importantly, I think the Fed did buy themselves some time for the G20 and made sure that they may not fall behind the curve should the G20 end in a disaster and an escalation of the trade war. So reality is, if the G20 talks on trade go better than expected, the Fed can always shift the cut down to September and December without the market really having anything to argue against. Or if the trade war escalates, we're going to see a 50 basis points cut in July. I now want to look into what the market reactions were. So on the first slide, we do see the 10-year yields really in the aftermath of the Federal Reserve meeting, or the sort of key sentence that I mentioned, with a sharp move lower that taken the 10-year yield below 2%. The next slide we have a quick look at. This is the one that is a little bit scary, where the divergence between bond yields and equities continue to open even further. And this is just what scares the market a little bit and wonders at what point this just cannot open even further, and maybe with equities having finally to turn down. The next slide, what we see is the Dow. The Dow obviously had a field day after the somewhat more dovish Federal Reserve, and we have taken out the 2019 highs at 26,696, and we are now obviously aiming at the all-time high at 26,952. And the way the Fed injected a little bit more air into the bubble, we cannot really rule it out, and it's really hard to be bearish stocks, even though we know all the risks that surround us with trade war and all the other things. The next chart sees gold. Gold has really gone on a complete rampage in the last few sessions and has been doing so actually all of June. I wish some of that volatility we see in gold would really come into foreign exchange, as it really seems the conviction these guys have on the metals is just extraordinary. We've taken out the year's high, we have taken out the 2018 high, and we have to go back as far as 2014 to see gold at such elevated levels. 1380 is a big macro monthly pivot, so as long as we would be staying above there, there's not much to see in exhaustion, and we could just drift higher. Maybe a bit overdone in the short term, but the story seems to fit, so these guys will just keep going on this. The last slide we have is the dollar index. The dollar has weakened quite a bit in the last few sessions. We have been breaking the 2019 channel at 97.87. We're not yet below the lows from last week, the 97.46. We got to watch this 96.46 area. If we break it, that would be a real confirmation that the dollar is just going to be heading south, something I actually think is going to happen. And the first time in 18 months, after being dollar bullish for 18 months, I actually start to shift towards being more negative towards the dollar. In general, I would say for next week, we obviously have the upcoming G20 meeting towards end of the week, June 28 and 29, which is going to be a big pivotal event, whether or not we see an escalation in the trade war. We have the Iran-US worries to whether the US is going to retaliate. So something more to look out for. Thanks very much indeed. I wish you a lovely week. Thanks very much. Bye-bye.